in which instances when there's breakout, you don't look for liquidity to be taken. Like yesterday, you said you could take sells without getting liquidity. Yeah. So what was the idea behind sells yesterday? Oh yeah, because yesterday you already created structure, right? So it's like, it's kind of like understanding what part of the cycle you're in, right? So like there's 3 cycles. You guys know that, right? There's obviously the continuation, there's the range cycle, and there's the obviously the point where you make decision, right? Which is this as well. I'll say the 2 cycles. But yeah, if you're in this cycle, then obviously you're just trending. You're trending in one direction, right? But if you start to obviously come up, create a high here, then create a low, you're starting to create a range. At that point, you kind of want to sit out and wait to see what happens next, right? So therefore, in those situations, I will want to see liquidity, because usually what will happen is you either come, let's say you create a range here, right? You create a range or after becoming up bullish. Let's say this is your pole here, right? You have like a bearish candle now that creates a resistance. Cool. You then have your support being formed here. This is the range you're currently sitting in, right? So now you have your resistance confirmed, your support almost confirmed. You then have a bullish candle support, right? So in this situation here, a couple things could happen here. First thing is obviously you can just come down after creating a top wick, right? This can happen at any given point. I'll say if you create a top wick first, then you're grabbing liquidity to go back down. However, if you usually, this is what happens in the bullish trend, you would grab liquidity down to drive up, which means that you'll be breaking our lows and then making your way up towards the highs, right? So in those situations, I'll only wait for liquidity whenever we're in the cycle of the range. But when we're in the cycle of the continuation, it's pretty straightforward, right? Because price doesn't always grab liquidity, and sometimes when it just continues to drive and create structure in a smaller time frame, let's say like it does something like this, where it just drives up, all of a sudden, you know, there's no pullbacks, there's just a couple of bullish candles, right? You have maybe a bearish candle here and there that prints like minor bottom wicks, etc. But aside from that, you just have pretty bullish candles. At this point, once it breaks a certain point, think of it as like a range 1 and range 2. It's like breaking structure. So once you have clean traffic, you should just expect price to mirror that whole entire traffic area on price, right? So that's kind of what it is, really. Understanding the difference between trend and range. And when you're in a range, you would wait for liquidity. When you're not in a range, you would just take the positions according to the ideal direction that price printed. Like yesterday, when you were coming down here, right? Like look left here. I think at some point you closed below the range here. If I'm not wrong, I think it was like somewhere around like here at 86 or something. At that point, you can just take sells to come down because you're breaking structure. And if you were to grab liquidity, it would have grabbed liquidity by now. Or sometimes even like this, to be honest, could have been more ideal too. I think you printed a resistance here. You then printed some type of support here. This is the range that you printed yesterday, right? And then if you see like a bearish candle closing respecting resistance with a top wick, and then you see another candle close bearish resistance with a top wick, right? That indicates that we're respecting this area, and therefore you're breaking back into this range here, and that should make your way down towards 1976, which should come down and fill the entire range here to fill this area to the left here, right? So that's like kind of what I'll say in the instance where you wouldn't need liquidity, because if you were to grab liquidity, it would have been confirmed with these candles here, but these candles all came up, which that was a chance to grab liquidity, but it all rejected and closed respecting. Therefore, in that situation, you'll need to see a top wick being formed to drive down. Unless you're waiting for something very specific and you need that to form to get an entry, then that's different. But in terms of understanding the structure and if you grab versus not grab liquidity yet, that's what you can wait for sometimes instead.